Hey, Intro to Accounting. Today we're going to take a look at a couple problems in 1-2. We're not going to complete the whole thing. We're just going to look at Terms Review 1-2, Working Papers 1-2, and then the Application Problem 1-2.1. Please make sure that you watched the videos beforehand. These transactions don't always come easy. Usually we need to practice it a couple times before we really understand it. So that's what this is all about, but you really should watch the videos before you attempt these exercises. So let's just jump in. I don't always do the terms review with you, but let's just do it right now. I'll do it with you. But in the future, I'll probably leave these to you on your own. But let's see, a business owned by one person sounds like a proprietorship to me. Let's use this. Generally accepted accounting principles, standards, and rules that accountants follow while recording and reporting financial activities. I know that that's going to be GAAP. The amount remaining after the value of all liabilities is subtracted from the value of all assets. That sounds like it would be, it's either owner's equity or it's equities. So I think it's going to be owner's equity. A business that performs an activity for a fee, well, that's an activity, so that's probably a service business. Financial rights to assets of a business, that's going to be equities. Because if we remember that little lecture that we had, there's two different types of equities. So here, your liabilities and owner's equity will both be equities. And then here, a formal written document that describes the nature of a business and how it will operate. That's going to be a business plan. That was one of our vocab words that I actually didn't cover, but it's in the book. So once again, make sure that you're looking at the book. There's going to be some answers in there that you are just going to have to kind of look for on your own because I expect you to be looking at the book. So let's do check my work. Hey, we got them all right. Awesome. Let's go to number 2, or the second section here. Any business activity that changes assets, liabilities, or owner's equity. That sounds like a transaction to me, what we're working on all through this unit. Next, the equation showing the relationship among assets, liabilities, and owner's equity. Well, that's our accounting equation. A person or business to whom a liability is owed. That sure does sound like a creditor. Okay, so we covered that real quick, but once again, vocab words you want to make sure that you're looking at in the book. And then a record that summarizes all the transactions pertaining to a single item in the accounting equation. That's going to be any specific account. And then the name given to that account is account balance. The difference between the increases and decreases in an account, well, that should be our account balance. I think I clicked the wrong one on something. The name given to any account is the account title. I think I attached it to the wrong one there. And then an account used to summarize the owner's equity in a business is the capital account. Because remember, we had Michael Delgado's capital. So let's see. I feel like I screwed something up there, but let's just check. Hey, we're good. Okay. So once again, you see up here, assignment score 100%. So let's submit that assignment for grading now. And we got it right. I can take it again if I want more practice, but I think we're good. Let's go into working papers 1-2 now. And I'm at least going to show you this first part. And this here is really, really great practice. So make sure that you don't skip this. For each transaction, you're going to enter a plus sign if the account classification asset, liability, or owner's equity is increased. Enter a minus in the appropriate column if the account classification is decreased. So both a plus sign and a minus sign can be entered if necessary. Where would that be? If you watch transaction videos, it's probably going to be in assets, right? When two assets are affected and one goes up and one goes down. So this is exactly what we were looking at in the last video, and it's just practice. It gets more in depth after this, so we really want to make sure that we understand what's happening to these assets, liabilities, and owner's equity. So let's look first here. Quick hint, all right, if you're on your Chromebook and you come across a big problem, if you hit this little icon here, this pin, it's going to make it so this can move. All right, so if you ever want to know that, there you go. It'll come in handy later on. So let's just put these together here. Oh, Let's open it up. So the first one, I bought supplies on account. All right, so your business. What happened here? We bought supplies on account. We're looking for those keywords. Well, if I bought supplies, I know I already have more supplies. What is supplies? Well, it's something that we own. That's an asset. So here, our assets we know goes up right away. Okay, so assets goes up. The next thing that we have is on account. Anytime that we have on account, we know that it affects a liability. So what do we do here? We know that we're going to owe more money. So we bought supplies on account. That liability goes up because we owe somebody in what? Accounts payable. So let's put a plus there. When we look at this, we know the accounting equation is going to be balanced because the left side has a plus and the right side has a plus. Make sure two things are affected, right? So here, assets and liabilities are affected. You're never going to have all three affected, okay? So sometimes people put in like plus, plus, minus. Only two of them are going to be affected, and sometimes only one when it comes to asset, okay? So please remember that. For number 2, we received cash from an owner as an investment. Well, we look at this, we take out the keywords, I received cash. Well, the cash is an asset, and if you receive it, it's going up. What's the other thing that's affected here? It's Michael Delgado's equity, okay, his capital, and that falls under our owner's equity. Now, when we look at this, we go, okay, Michael Delgado is going to have more claim to the business, okay, he has more equity in the business. That's why the owner's equity goes up here. Is the accounting equation in balance? Left side is a plus, right side is a plus. Yes, it is. Number 3, we paid cash for insurance. Now, here's where it gets tricky. We paid cash. Anytime you pay cash, cash is going to go down. What is cash? It's an asset. So we're going to put a minus in the asset section. Now, next, I paid it for insurance. What kind of insurance is that? It's prepaid insurance. It's always prepaid insurance, which means it's something that I haven't used yet, and it's an asset. So I have a minus here, but then I'm also going to put a plus. So it's a minus and a plus. And then for number 4, I'll go back to this. So it's only these 2 accounts that are affected, okay, or there's 2 assets. And when we look at this, we know that this accounting equation is still in balance because essentially this evens out to a 0 and there's nothing in liabilities and nothing in owner's equity. So then number 4, we paid cash on account. Well, we paid cash again. Cash is an asset. If I paid it, it went down. So a minus here. And then if it's on account, we know that it's going to affect a liability. Now this liability account tracks how much we owe to other people, right? So is this account going to go up or down? Well, it's going to go down because now we owe less to somebody. So that account goes down and our accounting equation is in balance. Let's save and continue here. And these next ones are going to be pretty much the exact same. So I'm not going to go through this with you. I'm just going to hit save and continue, and I'm going to get 50% wrong, okay? You make sure you finish that, though. So I'm going to hit I'm done, grade assignment now. And you can see here on this, we got a 2 out of 2, right? It was all correct, what we worked on there, okay? So let's go back to the assignment. We have one more thing. This last part's not graded, but I'd like you to attempt it. And this is just solidifying that you understand the accounting equation. This is a randomized problem, so you get kind of 3 attempts at it. You only need to try it once. But here, we're just going to calculate out the what the missing component is. So if we looked at this here, what we do is we know that assets equals liabilities plus owner's equity. So how do we figure out this owner's equity? Well, we're going to take the assets and we are going to subtract the liabilities. Let me just pull this up real quick. I'm going to pull up a calculator, and unfortunately, I don't think you can see it. Yeah, but it's 16,650 minus 11,725. And what's that going to equal? 4,925. So here, if we look at this as the accounting equation and balance, does our liabilities plus owner's equity equal our assets? Yes, it does. Okay. So for the next one, we have $11,250 in assets. We're missing liabilities, and our owner's equity is $5,250. So what would you do there? Well, we're going to take the $11,250 and we're going to subtract the owner's equity of $5,250, and that means that our liabilities is going to be $6,000. So when we add up $6,000 and $5,250, do we get our assets? Yes, we do. Okay. Let's just do one more here, and then you guys can do the rest. Now, if I don't have any assets, what do? I just add up my liabilities and owner's equity. So here I take $2,250 and add in $4,050, and I get $6,300. So is my accounting equation balanced? Yes, it is, and I am good to go. So that's how we're going to run through a couple of these problems today. Terms review 1-2, working papers 1-2. That's the on your own and work together and on your own, and then the application problem that's randomized. Please don't move on to these next two. These will be done on Thursday. So you guys have a great day. If you have any questions, let me know.